This is the most strength we've seen on the euro US dollar in the past 2 years, but most of that strength has come from the US dollar. What if the euro gets weaker? Will we see more sell side? Probably so. We're going to talk about it here at Capital Markets. Traders, what's going on, guys? Welcome back to Capital Markets. It's your host, Cleveland Bishop. Hope you guys are having an awesome start of the week. Here at Capital Markets, we give you guys the technical analysis and the fundamental analysis every single day. So make sure you guys stay subscribed so you can be up to date on what's happening real time in these markets. All right. And anytime you guys ever have any questions, please comment down below. We'll make sure we'll be right there to answer any and all questions, technical, fundamental, anything. All right. So guys, look, right now, if you guys take a look at the Euro USD here on a weekly time frame, you will see a massive sell side that has been happening over the past 6 or 7 weeks. And most of that has come predominantly from the US dollar. Now, the interesting part about this move is that, again, there's always counterparty risk. Whenever a sell-off is happening, you want to know where that sell-off is coming from. Is that happening in the euro economy, or is that happening in the US dollar economy? And that is happening in the US, okay? If the euro ever makes a decision as to what they're going to be doing when it comes to monetary policy, quantitative easing, all the things happening with the Italian election right now, which we have seen has brought in some sell side for the euro, folks, we will continue to see this euro USD slide. A lot of people would think of this market as overextended or it's about to pull back. It has to turn around. Guys, that's happening from one currency pair. If this second currency pair continues to weaken, like many analysts think it will, then we will see the market trade from where it is right now in the $1.16s. This thing will run down to the $1.14s. That'll be a 50% retracement from those year's highs. Okay, so let's keep an eye out what's happening with this euro. We don't have too much data coming out for the euro this week. We have a few minor data releases that are coming out, but no red folder events. That'll be going on next week. The big news and the big data releases that are coming out this week pertain back over to the US dollar. We have NFP happening, average hourly earnings, we have unemployment claims, we have preliminary GDP all this week. Preliminary GDP happening on Wednesday, and the rest of those data releases are going to be on Friday. Okay, so the US dollar is still very, very conditioned to end this month off with even more strength. All right, so that's something that we're going to be keeping an eye on. As you guys know, the US economy has been strengthening all throughout Q2 and definitely throughout Q1. This has been the predominant driver. We have most of the Fed, Powell, Williams, all of these individuals are saying that this inflation data is going to have them heighten rates. We have that rate hike, folks, coming in this month. Okay, June is when that rate hike is going to be happening. Right now, we are priced in at over a 95% chance that they're going to be heightening rates. So these data releases that are going to be coming out are probably going to be pertaining more so to the next rate hike. They're going to be trying to price in and say, okay, are we going to have to heighten rates again? We're on target this year for 3. You have some of the more aggressive Fed members wanting 4. I think 4 can actually happen. We're still in the middle of the year, and folks, it could definitely transpire to us seeing even more economic growth, right? So right now, when it comes to tax reform, that's still hitting the economy. When it comes to overall consumer confidence, we're going to be getting those numbers out as well. We'll see how that performs. When consumer confidence is high, you see more spending happening in the economy. All these things could allude to a higher inflation, which could allude to a higher interest rate. All right, so let's keep an eye out on what's happening in the US dollar. And I want to know your thoughts on where you think this dollar is going to go. Comment down below to give us some feedback. I would love to hear your interpretation. Speaking of the US dollar, head over to the NZD USD. You will see even more massive sell side. But the interesting thing about the NZD USD is that it's really consolidating down here at a pretty decent low. There's a previous point at which this market has just met. If you look here on the monthly time frame, where we definitely see a lot of consolidation. Well, markets have just reached back down into that same area of consolidation, hoping to see markets trade back up into structure. Now, obviously, if we get more US dollar strength, this is going to be a bad trade idea. You don't want to start buying this market up on the precipice that this US dollar starts to get stronger. But if there is any sense of US dollar weakness, or if the US dollar kind of just stays somewhat consolidated because they potentially already priced in the June rate hike, then you may see market participants sell the US dollar off, which would give you a very nice entry here on this NZD USD back up into structure. This week is going to be really predominantly ran by the US dollar, but last week we saw a lot of pressure come in to the UK. Month after month, the UK has had a really hard time performing when it comes to CPI. April 18th was really the date that really set things into play for the UK. You guys will see a massive amount of sell side across the board on all GBP pairs on April 19th, because that was the day that CPI came out, and it came out demonstrably lower than what was expected. Well, we just had another CPI release that came out for the UK last week, and that release also missed target. So we saw even more sell side on the pound. And so overall, this week is going to be predominantly ran by the US dollar. That's the major pair that we're going to be keeping our eyes on. The pound was a pair that we were watching all last week, and as we expected, the pound ended up trading lower. CPI came out much lower than expected, and that's the third month in a row that CPI has not performed. Okay, you guys can look here, a quick screenshot on the weekly time frame. You guys will notice April 18th was the day that CPI came out for the pound that hit off and missed targets. Folks, since then, the market has sold off on the GBP USD over 1,000 pips. All right, so I think the sell side could continue, and that's what the UK want. They don't want their interest rates to increase as Brexit fears are still weighing. That's a very big problem. So they actually like the fact that markets sold off a bit because it puts less pressure on them to start raising rates. All right. So overall, folks, let's keep an eye out on what's happening with the U.S. We get consumer confidence that's going to be coming out on Wednesday. If you guys ever have any questions, please let us know. Make sure you guys are also subscribed. If you guys are looking for a broker, head over to Capital Markets. We route from some of the best liquidity providers, which means you guys will get instantaneously filled, okay, from some of the largest entities in the world straight from the interbank system. All right, that's really, really important when you're working with a broker. You don't want to work with somebody who's just put together some type of platform. You don't know where your trades are coming from, okay? And when it comes to your trades, folks, you're going to be paying a lot less here. Our spreads are very tight, all right? So just take a look, head over to capital-markets.com, get an account started today and see for yourself how tight the spreads are and try to activate some positions. You guys will notice a big difference. All right, guys, I'm Cleveland Bishop here with Capital Markets. Talk to you guys tomorrow.